Welcome, everyone. I'm Mike Bershazadeh.
And I'm Ashley Ward.
And you're listening to the What Matters podcast, and our mission
to spotlight top RIAs, wealth managers, and investment professionals who are redefining wealth management.
Join us as we dive into their journeys, strategies, and insights.
Whether you're an investor or an inspiring pro, this is for you.
Get ready for impactful conversations on the What Matters podcast. Hey, everyone. Welcome to another exciting episode of the What Matters podcast. I'm your host, Mike Bershazadeh.
And I'm Ashley Ward.
Today, we're excited to have Philippe Bolopion joining us. Philippe is Tobam's New York-based managing director, product leader, and co-head of long-term investing. Welcome to the show, Philippe.
Thank you for having me.
Well, it's a pleasure having you with us today, Philippe. We're excited to have you on the show. So let's start diving right into your origin story. So talk about a little bit about your diverse background from journalism to advocacy and now to financial services. Can you share with us and our listeners your journey and the experiences that led you to your current role as managing director at Tobam?
Yeah, certainly. Yeah, I realize I have a bit of an unusual background for someone working in finance. I did pretty much all of my career in journalism and human rights. I started my career as a young French journalist in the Balkans, in Kosovo in '99 at the end of the war there. And then I moved to the US to cover the United Nations, which is headquartered in New York. So I worked for about 10 years. I covered all the big crises. I was traveling the world with UN Secretary General Kofi Annan at the time, and then Ban Ki-moon, working mostly on wars, crises for the newspaper Le Monde and other French media. And then I made a switch in 2010. I joined Human Rights Watch, which is one of the two biggest human rights organizations in the world. Still working a lot on crises from a different standpoint. And I stayed at Human Rights Watch, which I think is an amazing organization, for about 13 years, so a long time. In different roles, mostly doing advocacy on crisis, trying to influence governments and the UN, multilateral institutions, to do the right thing on human rights issues. And then about a year ago, I met the founder of Tobam. His name is Yves Chouefati. He's the head of and the founder of the firm I now work with. And I met him through Human Rights Watch because Tobam has been supporting Human Rights Watch for a very long time. And at the time, he started asking me for some advice about a new investment strategy he was launching, which was premised on the idea that democracy is actually better for investors than investing in autocratic countries. And I got really excited about his ideas and his vision for this strategy, to the point that I eventually decided to join Tobam. So, here I am.
Really cool. So talk to us a little bit about Tobam. You guys are not a typical investment firm, or correct me if I'm wrong there. Tell us about your strategy there and what the company's about.
Okay, so the company was founded around a discovery which was made by Yves Chouefati, the founder of the firm, who pretty much invented the mathematical formula to measure diversification. You know how people always say, well, you have to have a diversified portfolio. It doesn't mean anything unless you can actually measure and maximize that. So that's exactly what the firm did. They invented that formula, which is now being taught in the CFA curriculum and has been well accepted by mathematicians and experts in the field. And so the firm has really developed initially around this strategy, bringing on some of the most sophisticated and demanding investors in the world. One big investor in the strategy was CalPERS, which at some point had close to $1 billion under management with Tobam. And so the firm grew around this strategy, which is unusual for a French firm. Most of its client space being actually in North America. More than 60% of Tobam's clients are in the US and in Canada. Most of them, a large majority, are large institutional investors. And so they were invested in this strategy. And I would say over the last 6 months, we have unrolled this new strategy called LBRTY, which is designed around the idea of democracy. And the big, I would say, commercial push is in North America, still in the US and in Canada, but also in Europe, Scandinavia, Switzerland, and other countries like that. So, it's a boutique firm, I would say. We have about 40 people, currently something like $5 billion under management. So, something significant, a lot of expertise and credibility in the quantitative sector, but also a firm, I would say, that's small enough and innovative enough to come up with a very original and different strategy like the one we are discussing today.
Really cool. And how many total advisors do you guys have? And are they all located in the New York area, or everybody spread out?
So we don't really have advisors per se, because we are, our strategy is made for large public investors. So we have a business development team, and we have currently 4 people in the New York office, but we have also colleagues in Paris and Dublin.
And when you said that 60% of your clients are in the U.S., or where are the other 40% located?
I would say US and Canada, North America. The other ones are largely, I would say, Scandinavia, Switzerland, and actually a very small number in France.
Gotcha. Thank you.
Very interesting. So, Philippe, can you share how your background in journalism and advocacy has really informed your approach to financial services and your work at Tobam?
Yes, I guess what got me really excited about this role and this strategy is the fact that democracy has been receding in the world for almost 20 years now. And that's a big trend that very few people are actually aware of. Everybody, thankfully, or most people are aware of climate change. But very few people are realizing that democracy has been receding for almost 20 years. And to me, that's an existential threat to the way we live. It's an existential threat to human rights. So when I started in this field 20 years ago, the world was a much freer place. There were, human rights were more widely respected than they are today. And if you think about it, it's, extremely worrisome. So I've always been attached to human rights, obviously, always been interested in how, different type of governments foster different types of societies, and how authoritarian countries tend to actually generate many more human rights violations, but also global instability. Often the countries that start wars, or the countries that are the reason why wars are being started, are often autocratic countries. And in fact, if you look at the big trends, as I was saying, in the last 20 years, democracy has been receding in the world. It's going down. Freedom is going down, and the number of conflicts has been rising. So in the last 20 years, there has been more conflict, they are more intense, and they last longer. So these are the big trends that we operate under. Why am I interested in what's happening in the financial sector? It's because I think the financial sector has been largely oblivious to these big trends. And in fact, you have, arguably very progressive investors in democratic countries like the US, people whose, pension funds that are investing the retirements of teachers in New York or California, who too often, I think, have been investing this money in autocratic countries like Russia, like China, like Saudi Arabia. And in some cases, I think that these investments are actually strengthening these governments. Certainly the Chinese government or the Russian government, they do well economically because they are getting foreign capitals. And then what do they do with this resource? Well, in many cases, I believe that they use this resource to undermine democracy, not only at home, but around the world. They have a sort of global agenda. In particular, I would argue the Chinese government has a global agenda, but Russia as well, to undermine democracy. And so misinformation around the world and try to discredit really the very idea of democracy. So to me, breaking this cycle is really important to actually preserving democracy on a global level. And so what I really like in the strategy that I'm here to discuss is that it makes the investment case as to why investing in autocratic countries does not make sense. Why it's not good for the world, that I believe, but that's my own conviction. But it's not good for investors, because when you're invested in autocratic countries, our data shows that you're actually taking on more risk, or that you're taking on a risk that's negatively rewarded over time. So in our view, rational investors, if you're invested in the long term and you're trying to do better than the benchmark, you're trying to do well for your retirees, your constituents, you should try to minimize your exposure to autocratic countries, because you will just do better in the long run.
Very, very interesting. So, as someone who's deeply involved in assessing country risk and promoting human rights, how do you balance ethical considerations with financial obligations at your work at Tobam?
So we really believe that as an asset manager, it's not our role to decide what's good, what's bad, what's morally acceptable or not acceptable. You know, I can certainly share with you my own convictions on that. I'm sure you have your own, but we don't believe that's our job as asset managers. Our job as asset managers, we believe, is to make the difference between what works in the long term versus what doesn't work. So our investments are really long term, and we want to look at what's going to generate value over time, what's going to create value for our investors. And that's the entire premise of our strategy, is that actually if you're invested in democratic countries, in the long run, you will do better. There are many reasons why that is the case, and I'm happy to discuss some of them, but some of the obvious one I would say that people are aware of is that often in autocratic countries, you have governments that can act irrationally. They make decisions that are not based on the best interest of the economy or their society, but often that are based on their own best interest. There is a lot more corruption. Investors are less protected by the laws, by checks and balances that exist in democratic countries. They cannot be expropriated as easily in a democratic country as you can be if you're invested, for example, in Russia, which people came to realize after the invasion of Ukraine. So that's really the engine of our strategy. It's the fact that democratic countries, because of the system of government in and of itself, actually create a better environment for public equity investors. That's really the heart of the strategy.
Very insightful. And so, thinking about the future of the industry as a whole, obviously, Tobam, you guys are about, promoting this responsible investing and advocacy for this against autocratic countries. Do you see this becoming more of a trend in the future years for the industry as a whole, or do you see any strategies that potentially will help uplift what Tobam is currently promoting?
So I strongly believe that the heart of the strategy, that investing in autocratic countries carries risks that maybe the market has not priced correctly in the past. I think that's gaining ground. One of the big trends in investment over the last few months is people who are investing in emerging markets are excluding China from their investment universe. People are very worried about the trajectory of the Chinese government, which has become much more oppressive, I would say, over the last 10 years. And the economy has not been doing well, despite all of the sort of market manipulation that the Chinese government is engaging in. But I think there is a long-term trend here, which is that people are starting to realize that if you're investing your money in China, if you're investing your money in Russia, you're taking on a risk that you may not want to expose yourself to. I think the invasion of Ukraine was a big wake-up call. There were lots of investors who did not realize that they could lose everything overnight. And when the Russian government invaded Ukraine, and pretty much the Russian stock market grinded to a halt, people, companies based in democratic countries lost tens of billions of dollars and are still to this day being expropriated slowly from Russia by Vladimir Putin. So I think this was a wake-up call, and I think in the future people will look at autocracy as a risk when you invest somewhere, and it's really one of the main conclusions that we have from looking at a lot of data is that you can show that there is such a thing as an autocracy risk driver in the market, that this risk is actually negatively rewarded. Risk is not always a problem for investors if there is an upside, but when you expose yourself to a risk and there is only a downside, it's not something that investors are seeking. Another conclusion that we have from our research is that most of the exposure to this risk is actually indirect. So in other words, you don't need to own Russian stock, or you don't need to own Chinese stock to be exposed to the Russian or the Chinese market. If you own the stocks of companies that are in France, in the UK, in the US, but are heavily exposed themselves to China, if tomorrow there is a war with Taiwan or a new COVID and the Chinese economy closes down, you will be hurt. Your portfolio will be hurt by that. So that's the third point. And the fourth point is that the autocracy risk driver, it's independent from other well-known risk driver in the industry that people are familiar with. So to me, that's really the innovation at the heart of our strategy. And I think people are starting to look at these factors. China, lots of worry, and then the return of geopolitical risk. People realize that there are more wars today, and wars have massive effects on the market. And so for these two reasons, I believe that what we do is sort of gaining a lot of attention.
Philippe, so given your democratic right strategy there, what investments or sectors are most exciting to you or Tobam right now?
I think what most of our interlocutors, clients are looking at is our emerging market strategy, because that's the one that's sort of most sensitive to the autocracy risk factor. People look at the emerging markets as difficult to navigate. They see what's happened with the Chinese economy. And in fact, we can show that for public equity investors, China has not been a good investment in the last, maybe the last 15 years. The Chinese economy has almost doubled. I think they went from something like 8% of the world GDP to almost 18% to the world GDP. So there's been a real boom in the Chinese economy. The Chinese economy has developed tremendously, and yet as a public equity investor in the Chinese market, you were not rewarded for this democratic growth. It means it was captured somewhere else. I don't know if it's corruption. I don't know if it's in other areas of the Chinese economy, but certainly for public equity investors, it's not been worth it to be invested in China. So I think that's the area where people are looking at our strategy with the most interest. And in fact, our first our first large institutional investor in the US invested in our LBRTY emerging market strategy for this very reason.
Thank you.
Gotcha. That's great.
Well, Philippe, thank you so much for sharing your insights with us today. It's been an absolute pleasure having you on the show. I think that concludes our conversation today. We're really excited to see the work that you and Tobam continue to do and the difference and impact that you continue to make on the world. Thank you so much.